Hi, and welcome to my podcast number 7. I'm Glen Cooper. I'm a business broker in Denver. I've been helping people buy, sell, and value small businesses for nearly 50 years. I've also written the only book on the subject called Glen Cooper on Business Brokerage. That book's available at Amazon.com, but more on that at the end of this podcast. Today in this episode, I'm going to tell you how to start the process of selling your business by getting 2 or 3 absolutely free business appraisals. Yes, by calling just a few business brokers, you can find at least 2 or 3 who will give you free valuations of your business. But you have to do it right, or you're going to waste a lot of time. This is also the ideal time when you're talking to brokers to collect useful information on business brokers, just in case you decide to hire one. And of course, if your business is in Colorado, I hope you start by calling me. Even if you're sure you'll sell the business yourself, I will agree to value your business for you absolutely free if you're in Colorado. If you're outside of Colorado, you can still likely find 2 or 3 brokers who will do the same thing, or at least try to do what I do. Remember, experienced business brokers are probably going to be the best at this. I spent my first 25 years as a business appraiser as well as a business broker. I did both jobs. The point is that I'm telling you to get 2 or 3 free appraisals first. I'm going to tell you just how to do that in this podcast. Then in future podcasts, we're going to discuss all the ways that you can use the information you get about the price and terms that you want to offer to buyers, no matter who serves as your broker, and even if you don't use a business broker. Only hire and agree to pay a business appraiser if you're not satisfied with the free appraisals you get from business brokers. A professional appraisal will cost you possibly $3,000 or more, and maybe much more. So it's well worth getting the free ones first. Now, what I'm covering today doesn't quite follow what's in my book, and I want to explain why not. My book, that I'll mention at the end of the podcast, was written to train business brokers, and I've already covered the first 6 chapters of that book in my first 6 podcasts. But starting with chapter 7 of my book through chapter 12, those next 6 chapters, 7, 8, 9, 10, 11, 12, focus on setting up a business brokerage process to get business owners to hire the broker to sell their businesses. So if you are a broker listening to this, you need to go and read my book. But if you're just a seller, a potential seller, or a business seller's advisor, then this podcast content is different and designed to be more for you and less for the business broker than my book. How to selectively prospect for the right listings may not be relevant to you unless you're going to be or already are a business broker. The purpose of this podcast series is to stay focused on what your business is really worth, and I will try to stay focused. So to maintain that focus, I'm not going to cover the process that brokers must use to obtain businesses that seller clients list with them. What I'm going to cover in these next 6 podcasts, numbers 7 through 12, is how you, as a seller, get ready to create a package or sales presentation for your business. And the reason I recommend my book to both business brokers and business owners is simply because if you're going to list a business with a broker, you should know what to expect. And if you're going to try to sell it yourself, there's a lot about business brokerage you're going to need to know in order to be your own broker. So that's why the book's recommended to both. My plan is to start with how to get those free appraisals. So let's go ahead and do that. For those watching the video, you now see my list of 5 steps you might choose to follow to get free appraisals of your business. But because my book was written for brokers, this is not in my book, so listen carefully or take notes if you're watching the video. The 5 steps are: call 3 local area business brokers, ask them to agree to confidentiality, send them what they ask for, give them the time to do the work, and agree to meet them to present their conclusions. Call at least 2 or 3 local area business brokers. Contact the 3 brokers at least and ask them specifically, number 1, if they market businesses the size and type of yours, because they may not, and 2, if they can do a confidential valuation of your business at no charge if you consider listing with them. Don't tell them the name of your business until you have that agreement to confidentiality. But don't ask about confidentiality at first, and don't use the term appraisal. Brokers purposely call their estimates of value brokers' opinions of value. That's the term they use, brokers' opinions of value, not appraisal. There are brokers who do not list businesses like yours. Some brokers only list certain types of businesses. Others only list certain sizes of businesses. So be honest about what type and size level your business is. And only after you've ascertained that these are business brokers who would be interested in your type and size of business, then go to the second step. The second step is to ask them to agree to confidentiality. Specifically, ask them how they want to handle that process. When sellers ask me that question, I agree to send them a one-way confidentiality agreement. But before you tell them who you are or what business you own, you want to get their assurance that the conversation you're having with them is confidential. That's why I send prospective sellers a one-way confidentiality agreement right away. So here's my sample. You can't read it easily, I understand. It's a little small type, so let me describe the key elements. I email this after I know their personal name and their business name and that they are the owners of the business and how to spell both names correctly so I can complete this agreement. Actually, I also check with the Colorado Secretary of State's office to see if they are indeed the owners of whatever will be included in the sale of their business. Note, I might also need to describe the real estate if that's going to be included. In my agreement, I am the recipient of the information that they are going to send as the discloser. In the first paragraph, I say that this discloser is disclosing information to me, the recipient, to receive feedback. I then have 4 short paragraphs that explain what I mean by confidentiality. For those of you who are brokers, this agreement is in chapter 35 of my book. But for those of you who are not brokers, the only thing that's important is that you want to get some kind of agreement that you're comfortable with, that you as the discloser are protected by the recipient's agreement to confidentiality. After confidentiality is agreed to, we go to step 3. Send them what they ask for, within reason, that is. What I need as a business broker to give my opinion of value is 3 years of historical tax returns on your business, 3 years of historical internal statements, profit and loss statements for the same periods as the tax returns for more information, a current internal profit and loss statement since the last tax return, a current balance sheet, and a list of owners' salary and other benefits during those previous periods, as well as the current period. And of course, the real estate information if that's to be included in the business sale. Now, some brokers will also need to interview you before they will agree to give you their opinions of value. I don't usually need to meet with you to do that, but some brokers will want to, and that's legitimate. My process is unique to me. After they've agreed to confidentiality, it's okay to give them whatever they need within reason. No one today needs 5 years of records. 3 are fine. No broker needs audited financial statements. We understand you don't have those. No one needs your employee names or salaries, so don't give out your employee names or salaries. They will, however, need to know what the business owner makes as a separate figure from the other employees. So if that's not broken out separately in your internal income statements, then you're going to have to explain that to them. As I said before, my process is explained in chapter 35 of my book in case you decide to review exactly how I do this before trying to do any of these steps. My background as a former business appraiser makes it easier for me to do this. As I have mentioned in earlier podcasts, most brokers are brand new in the business and it's much harder for them. The 4th step after you've given them the stuff they need is to give them time to do the work. Most brokers just take a week or so for that. And finally, agree to meet with them in person to present their report. Brokers will want to meet with you to pitch their services with you, and that's fair if they've taken time to give you a valuation. Now, if they haven't met you ever before, they're going to probably still want to meet you before they start any of this. That's also fair. It's just not my process, but it could be theirs. They may simply need to see who you are, unless they've already met you somehow before. Some brokers want to meet you before giving you their broker's opinion of value. That's not how I do it, but whatever process seems fair to you is okay if they're going to offer an opinion without any fee and without any obligation for you to list with them. Just be careful not to sign any document that might commit you. You're looking for a broker's opinion of value on your business without making any commitment to pay the broker or hire them in the future. On the other hand, whenever you are meeting with brokers, take this opportunity to ask them some questions. So in addition to those 5 steps to get this work done, I also want to give you some questions that you should ask the brokers or a broker who does this work for you. If the broker impresses you, you might very well consider hiring that broker. This podcast is about getting the most for your business, but if you find a good broker that you didn't expect to find along the way, you might want to know something more about that broker while you have them in front of you. So besides letting them present the report, take this time to interview them about what they do and how they do it. So let me give you 7 questions I think you should ask. In this graphic, you see 7 questions. How long have you been in business? What types and sizes of businesses do you sell? I'll be able to say it. How much do you charge? What types of marketing summaries do you prepare for seller clients? That'll be important later. May I see and keep a sample copy of those marketing summaries? How and where do you advertise for buyers? And finally, may I see a sample of your listing agreement? Again, let's take those one at a time. How long have you been in business as a business broker? We've talked about this before. It takes 3 good years to become experienced in business brokerage, enough to do this work at all. Most brokers fail after their first few years in the business. It's much harder than it appears, as we've talked about. The second question, what types and sizes of businesses do you sell? Also, some business brokers specialize in certain types and sizes of businesses. You should know what they specialize in. How much do you charge? A fair question, a simple question, but it does vary in its answer. Some charge more than others. There's no standard rate. It's a fair question for you to ask in any case. What types of marketing summaries do you prepare for seller clients? Now, business brokers usually call business summaries that they prepare for seller clients CBRs or SIMs. CBRs are confidential business reviews, and SIMs are confidential business memorandums. And most good brokers will use one or the other of these terms and should be happy to bring you at least a sample of what they do. Ask them for at least one that you can keep. Question 5, may I see a sample copy of what you create for your sellers? If you can get a copy of what they prepare or have prepared for a former seller that they worked for, that helps you to see what they can do. Most such samples of new brokers lack substance. They'll likely give you one of their best, so know that ahead of time. I get permission from my former seller clients most of the time to share what I did for them with other potential sellers. And very few refuse my request. So I'm assuming the other brokers do the same thing. If they don't, I'd be suspicious. 6th question, how and where do you advertise for buyers? Many buyers don't even know where their companies advertise. Sometimes they're not in charge of it themselves. BizBuySell.com is the best answer to the question because it's the best place to advertise a business for sale. And they have premium ads that are the only ads that work. We'll talk more about advertising in a future podcast. Finally, ask to see a copy of their listing agreement that you can take to your attorney for a review. Most of these agreements have to be long for legal reasons, so expect that, not as short as my simple confidentiality agreement. Don't be surprised by the legalese. There's a whole body of business law in every state that makes this agreement long and detailed. There's no such thing as a simple listing agreement. It's a reasonable request to ask for a copy to take to your lawyer for a review, even if you don't have a lawyer yet that you've picked out. Don't be shy about this. It'll actually give your broker hope that you're going to list with them since you're asking for a copy to share with your lawyer, but you still don't have to do anything. Some of the broker's listing agreements I've seen are really awful. Some are fine. Don't assume that they'll all be the same because they're not. Many states have standard agreements for residential realtors. You've probably seen those before. Only a couple of states have standard required listing agreements or regulations for business brokers. At the meeting where they present their conclusions, buy time. You should buy time to make your decision. Don't at any time agree to list at that meeting unless that's what you really want to do because they're the best of those you have interviewed. Take your time to make the decisions you need to make. Don't rush into anything. If they insist, ask for their written agreement so your legal counsel can review before you sign it. Don't in any case sign a listing agreement that you don't fully understand or approve. In no case should you be paying for this valuation or broker's opinion of value. That's a normal part of a broker's job today to get listings. At the end of the meetings with brokers, you are likely to have a solid knowledge, however, of what your business is worth in the eyes of these brokers. And the odds are that that's probably going to be pretty good. But if you're a good observer of people, you may also know which broker that you have interviewed that you no longer want to see again. There's probably at least going to be one. Trust yourself. You will know a good broker when you meet and talk with one. And as I've said previously, if you want a description of what I do as I offer my free opinions of value, that's included in chapter 35 of my new book, Glen Cooper on Business Brokerage. I've told you in every previous podcast that this book is available on Amazon, printed book, Kindle. It's a big book, but chapter 35 explains in detail just what I do in this situation. When a seller calls me, I immediately send that one-way confidentiality agreement to them. That agreement is also in my book. I then take the information that the seller sends me, the tax returns, historical internal income statements, current income statement, balance sheet, and owner's earnings figures, and create a spreadsheet for presentation to the seller, as well as a complete 3 to 4 page marketing survey report on what I see as the market value range of their business type and size. The value in going through all this is the saving of the appraisal process expense that you might otherwise think is right. An appraisal that you pay for is not usable beyond your own use. The buyer's lender will always insist on an independent appraisal all over again. In my next podcast, I will cover what you can do when the information that these brokers have given you is good. Meeting at least 2 or 3 brokers gives you a lot of information you can use. Lots of sample reports, at least 2 or 3 people to evaluate. As an experienced business owner, you already have the judgment to make the right decision about whether or not to hire a business broker, or to start over the process all over again, or to do it yourself. I'm going to see you in my next podcast. In that podcast, I'm going to focus on your forecast for a new owner of your business. What kind of buyer do you want to attract, and what can they do with your business? Thanks again for listening. I'll see you next time.